Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Saturday, August 12th, 2023. How you doing? Hope you're having a good day. Hope you had a good trading week last week and hope you're enjoying the weekend. I appreciate you coming here to my weekend review podcast. In this podcast, here is the format. First of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at all the trades that I entered and exited last week. Why we're going to talk about when I entered them, why I entered them, what strategy, what setup that I used to enter them, and most importantly, we're going to talk about how I am going to manage these trades, regardless if they go in my favor or against my favor in the wrong direction. But how to manage your trades is very, very important. In general, when I'm looking for a new setup, I'm talking about the long side here, I'm looking for some kind of rejection of price below me, whether that's the 300-day moving average, the 200-day moving average, the 250-day moving average, the 30 RSI, and I base all of my trades on a closing basis, on the closing price of the day, because I feel like the closing price of the day is the most valid price of the day. That's when you have the large financial institutions come in that last hour, and they're dealing with a lot of money. They have very smart people, best technology. And so that closing price of the day is the most important price to me. And I'm going to see whether or not a certain level below me was rejected. And if it is rejected, then I enter the trade based upon that level. Now, in the future, if it closes back below that level, I'm going to go ahead and just get out. Okay, so as we go through here, I will explain my process the very, very best that I can. And I use multiple trading strategies, so all the trades that you're going to see me discuss today are not going to be based upon one particular strategy. I use 5 different strategies, but they're all the same. They all encompass the same good trading principles, which are position sizing based upon the volatility, having your end of day stop, having your emergency stop, partially getting out of positions if they go your way on a daily basis. If the price gets to a trailing stop level above my entry, a certain trailing stop level, then I go into trailing stop mode, and then having rules, regardless of what the price does, knowing that if it goes down, I'm going to do this. Regardless of, or if it goes up, I'm going to do that. So you have to have if-then statements. You have to know exactly what you are going to do, regardless of what the market is doing. And that makes trading a lot easier, but it has to be based upon good trading principles. All right. So we're going to go through, we're going to take a look at all my trades. Again, when I entered them, why I entered them, how I am going to manage them going forward. And when we're done with that, we're going to talk a little bit about trader psychology. Always the most important part of trading is the ability to create a plan and then follow that plan. You do not know what the market's going to do, obviously, but you have the ability to do some prep work and do the things that I just mentioned as far as position sizing, good risk to reward ratios, emergency stops, end of day stops. But you have to have if then statements. And hopefully in this particular podcast, I will show you those. But the trading psychology portion is the most important. You can create a great plan, but if you don't execute on that plan, then it just all goes out the window. All right. After that, I have gone down through my master watch list, both on the daily time frames, and the weekly time frame. And I have identified some potential trades for next week, both on the daily and the weekly, that are interesting to me. Now, these particular markets are not going to be where they need to be yet. That's why I do this on Saturday, and I tell you this is what I'm looking for if and only if these things happen in the future, if they get down to these levels and they reject. All right. If they had already triggered, then I would have taken the trade. And I did take a new trade on Friday on Apple, which we'll go over as well. All right. So it's important that you wait for the markets to get to the levels that make sense. Look for the rejection of those levels. Position size, enter the trade, and then off you go. You're either gonna make money or you're gonna lose money. But hopefully, if you're doing things correctly, when you lose, it'll be small, and when you win, it can be larger, and that is the math. That's the profitable calculus in trading. Good risk to reward ratios. If your position is going for you, then being patient. And if it's going against you, being very impatient. Okay, so hopefully that will be helpful. Hang tight. I have to run the U.S. legal disclaimer. We'll get that out of the way quickly, and I'll be back in about 40 seconds. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. Thanks for holding through that with me. Hey, and last week, I accidentally, I think, hit the mute button on my microphone about halfway through. So I really apologize about that, and hopefully it will not happen this week as well. Okay, so let's get started. And before we get started, I just want to mention I'm going to show you the process that I use. There's different strategies that I use, and there's a variety of them in the trades that we're going to go over today. But I do want to mention right at the beginning, and I will mention at the end, but if you are interested in learning these particular strategies, step by step, I do teach private one-on-one lessons in the evening time via Skype. I teach a 15-hour course, and we go over ad nauseum all the rules. And if you take this course, I promise you, you're going to be a better trader. I have been trading for 28 years. I have taught people from all around the world, from absolute beginners to several hedge fund managers. So, if this is something of interest to you, my email is in the link of the description. Just send me an email and we can start communicating. But it's a great course. You are going to learn 5 great trading approaches that are all based upon proper trading principles, and you'll have a skill. You'll have a skill for life. So if you're interested, send me an email. Okay, here we go. Let's get started with Zions Bank. Zions Bank was a short that I did take all the way back here on the 28th of July. Now, why did I take it? The previous day, we went above the 70 RSI, closed below it. We also had a V1 entry signal to the downside, so it would have been legitimate for me to take the trade right here, but the risk to reward was not good. The 200 is going to be my end of day stop, a close above the 200. So this was pretty well extended below it. So I waited to see if I could get some better pricing, which happened the next day. You can see this got closer to the 200-day moving average. So I did get short here at 38.80. Now, as soon as I take a position, well, let's do the math. I think this is one of the most important parts of trading, everyone, is your position sizing. So I have a very simple formula. It takes a lot of things into account. Let's just say I have a hypothetical $100,000 trading account. If I have a $100,000 trading account, I take 1% of that. 1% of 100,000 is $1,000. Now, if you have a $50,000 trading account, 1% is 500. If you have $1 million trading account, it's 10,000, right? So it works regardless of your account. But I take 1% of total capital, hypothetical $100,000 here, times 1% is $1,000. I then divide that by the value of the 2ATR divided by 3.73. It's going to tell me to short 268 shares. Now, I always have 2 stops. I have an end of day stop, and then I have an emergency stop. My emergency stop is always going to be exactly what the value of the 2ATR was above my entry. This is the pink line here. So if I have 268 shares and it moves up against me 3.73%, how much have I lost? Well, we just did the math. It's $1,000. Now, this is not going to happen often. Only about 5% of the time are you going to hit your emergency stop. And by the way, when the emergency stop is hit, I get out immediately. I don't wait for the end of the day. That's the only stop that I do not wait to the end of the day, whether it was 1 minute after the market opens or 1 minute before the market closes. If it hits that emergency stop, I am out. I've lost 1% of my account. No fun. I understand that, but it's not going to wreck my account 1%. But again, in my experience, that only happens about 5% of the time. The other 95% of the time, if you do take a loss, it will be because the market closes above or below your end of day stop. So again, over 70, under 70, V1 to the downside, rejection of the 200-day moving average, waited the next day until it got back closer, got short 38.80, place my trailing stop level 1.5 ATRs below. So if I get there, then I go into trailing stop mode. And in addition to that, on a daily basis, if the price moves my direction by the value of 0.45 ATRs, I will take a percentage of my position off, and I like to use 10%. So got short here, 38.80. Next day, went down, took some profits off, locked those profits off, reduced my position size, reduced my overall risk. Next day, down again, took more profits off. Next day, down again, took more profits off. Remember, this is a short, got to trailing stop mode, which means now in the future, if I have a close above a previous bar's high, I'm going to get out of half. Next day, that happened. We closed above the previous bar's high after reaching trailing stop level. I got out of the half of the remaining shares that I have available, including the partial shares that I took on the way down. So we got to trailing stop level, then had a close above previous bar's high, got out of half the remaining shares for a gain of 4.21%. Then we moved up, no profit targets, no profit targets. Here on the 8th, moved down significantly, took more profits off. And since then, Zions has been pretty strong. Up, move sideways here, but it's still above. The remaining shares that I have are still below, the 200-day moving average. If I closed above the 200-day moving average on Monday, I would just exit the trade. But depending on where it closed, I would still have a profitable trade because of the partial profits that I took here, partial profits that I took here, partial profits that I took here, the half that I took off here because it closed above the previous bar's high. So anyway, this particular trade, still profitable. The remaining shares I have up 1.2%. And, you know, if you're listening to this for the first time, you may think to yourself, wow, there's a lot of rules. There's a lot of rules. So there are a lot of rules. I think you have to have rules in trading, but don't be discouraged if you think you're never going to understand these rules. If you see them enough, I believe you get them. And then, of course, in my course, I teach them as well. All right, so that's Zion's remaining position up 1.2%. LMT. All right, LMT, I took all the way back here on the 31st of July with a rejection of the 300 SMA moving average, okay, all the way down here. During the day, it went below the 300, closed above the 300. That's showing me that the price is respecting this 300. Now, I position size based upon how I just showed you, taking 1% of my capital, dividing by the value of the 2 ATR. That shows me how many shares to buy. I'm long in this position. Place my emergency stop. How far below my entry? The value of the 2 ATR. Where is my end of day stop? My end of day stop is simply a close below the 300. Next day we went up, took some profits. Then we had a few days of sideways. This bar here on the 4th went below the 300, but just barely closed above it. So that kept me in the trade. In addition, I have my 1.5 ATR trailing stop level here. If I get there, then I go into trailing stop mode. Barely kept me in. You can see it respected the 300. Next day moved up again, took some profits. Next day a sideways day. Next day again, more profits. Next day down. Friday up, took some more profits. Not at trailing stop mode, but close. But this has worked out so far pretty well. This trade up 1.77%. KMX. All right, KMX, a little different approach. This approach is called a return to value V1 or V2, one of my very, very favorite approaches. They don't happen often, but when they do, they are very worthwhile taking. The two green lines here, this is the value zone. This is the 1 ATR channel. This is the negative 1 ATR channel. Anywhere in here is the value zone. Don't want to buy above value. Most retail traders, beginning traders, they buy above the value zone. You want to at least buy in the value zone and sell above the value zone, or buy below the value zone, sell in the value zone. So here we go. Price closed above value. Not interested. Came back into value. Now I'm getting interested, but I still need some type of approach. So above value, in value, I need sideways motion, and then I need a trigger to get into the trade, which happened here on the 4th of August with this V2 entry. A V2 entry consists of 3 bars, bar 1, bar 2, bar 3. Bar 2 goes below the low of bar 1's low. Bar 3 closes above the high of bar 1's close. I position size, I place my emergency stop 2 ATRs below, and then where's my end of day stop? Well, an end of day stop on a return to value V1, V2 is just a close below halfway of the washout bar. This is an important level from a Fibonacci standpoint. So I got long here, 83.25. Next day, during the day, it did exactly test that level, didn't it? But moved up, took some profits. Next day, moved up again, took some profits. Not quite to trailing stop level. Then we came down. Just want to point out again, look, the low of the day was halfway of the washout bar. That's how important these levels are. Had we closed below the low of halfway, I would have simply gotten out. And then Friday, we gapped down, went down. I thought, oh boy, I'm going to have to probably get out of this trade. But then nice big reversal back up and did take some additional profits. So this particular trade on the shares that I have remaining up 2.35%. Apple is a new trade that I took on Friday. I've been very patient, which is how you should be in trading. I've been very patient to waiting for Apple to get down to a level that made sense to me. Now, you can see we've had a huge sell-off in Apple. Unbelievable. But I did get long Apple here yesterday, the 11th of August. Why? Well, the main signal was because during the day we went under the 30 RSI and then we closed above the 30 RSI. That is my level. It's showing that there were no more sellers under that 30 RSI level at the end of the day. In addition to that, we also had a V1 entry. Bar 1, bar 2 goes below bar 1's low, closes above bar 1's close. So now we have two signals. The main signal is the under 30 over 30 intraday. Then we have a V1 entry as well. And we also rejected the 100-day moving average. The best trades are those that have confluences, combinations of indicators and signals all on the same day. And that's what happened with Apple. So I position sized. By the way, you see the sideways motion here? This was also one of the reasons I decided to take the trade. You want to wait and see. I mean, ideally, you want to wait and see that a market is starting to stabilize. Here, there was no it wasn't stable at all. It was just down, 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 dumping, 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 dumping. Now you have an equilibrium of buyers and sellers. That is why you have the sideways motion. On Friday, we went lower, then triggered above 30 RSI, plus the V1 entry, plus the rejection of the 100. So I position sized based upon how I just showed you. I placed my emergency stop exactly. What's the emergency stop? $2. I'm sorry, this 2 ATR emergency stop is $6.90. I placed my emergency stop exactly $6.90 below. So on Monday, or next week, if it gets down here, then I know exactly what I'm going to do. If it gets down here, I will sell I will sell all of my position, and I will lose 1% of my capital because it moved 2 ATRs and hit my emergency stop. Unlikely to do so, but my end of day stop is exactly the opposite of why I took the trade. I took the trade primarily because it went under the 30 RSI during the day and then closed above the 30 RSI. So Monday or anytime next week, if it closes below the 30 RSI, I will just get out and depending, if it just closes at $29 or at 29 RSI or 28 RSI, I will get out for a small loss. But in the worst case scenario, I know where my emergency stop is down here. So it's 30.03. I could not get very much closer to a good risk to reward ratio. If it closes at 29.99, I'm just simply out of the trade, and that is it. Have my emergency stop here. Now the orange line above here, what is that? That is my trailing stop level. If Apple gets up to this trailing stop level, then I go into trailing stop mode, which essentially means that if I have a close below a previous bar's low, I will take half the position. Then I have other rules to the upside. If we reject the 70 RSI, if we get above 65 RSI, then the 5 EMA comes into play. So, yep, lots of rules. But again, this is what I teach in my one-on-one course, and it's 15 hours. So we have a lot of time for me to test you, to teach you and test you so that you know all of these rules. Right now, I'm fully booked with my students, but please reach out to me and we could set something up for a little bit further in the future if you're interested. So I like this trade, really been was really patient waiting for this trade to trigger. Of course, any deep dip buy on Apple is generally a good one. If you look back in the past, doesn't mean this one's going to be. And I got in at 177.79, which is exactly where it is. So completely break even on the trade. And then UNG. So listen, I just posted a new video on YouTube talking about abandoned babies and island reversals. This is something I've been working on for the last couple months, been testing, and I'll tell you what, they are very, very strong signals. But it's not a long video, but I think it would be worth your while to take a look. The abandoned babies and the island reversal bars, and this is exactly a perfect example of why I took this trade. This is an abandoned baby, everyone. You're like, what is an abandoned baby? Abandoned baby is when you have one bar, in this case it's bullish, that's just abandoned. You can see there's a gap to the left, there's a gap to the right. You see how it's just kind of floating out here in space? And what that means is on this day to this day, we gap down. Why did we gap down? There was some bad news, there was something. But then immediately right after that, the next day, it gapped up, leaving this space in the middle. This is indicating that we had bad news and then, oh, never mind, it's good news. And this is a bullish scenario. So I did get long here at 688. In this particular approach, I don't scale out. I'm not doing anything. I just have two very simple rules here. I position size, as I normally do, and then I place my emergency stop 2 ATRs below, and then I place my profit target 4 ATRs above. So it's a 2 ATR risk to a 4 ATR profit. That's good trading principles. That's a 2 to 1 risk to reward ratio. And I basically, in my system, set this to say it's an OCO order. One cancels another, essentially saying I'm either going to lose $1,000 on this trade or I'm going to make $2,000 on this trade. And it's not just a random entry. It's based upon this abandoned baby. And you can see it just took off like a rocket ship. I had my I had my loss here. I had my profit here. And I even got better than the profit. I got some positive slippage because it opened above my profit target. So in 1, 2, 3, well, I guess I took care. 1, 2, 3, 4 days, had a huge move on UNG, up 14.3% and out of the trade. I do want to point out here, see, this was an abandoned baby to the downside, right? Gap to the left, gap to the right. You can see here on UNG, now we've had just the exact opposite. We gapped up, really, really good news. And then this day here, the 10th, after I was out, thankfully, it gapped down. So really good news here. For some reason, bad news here. This is a bearish position now. and we'll see what happens. But I'm glad I got out of that. So anyway, this is something else that I teach in my one-on-one course as well. But up 14.3% in 1, 2, 3, 4 days. Really great trade, and happy to show you that. All right, those were all daily time frame trades. Let's get on to weeklies. I also like to trade weeklies. Weekly entries are taken on a Friday. That's the end of the weekly. Oh, sorry, I have to go over here. Here we go. All right. I bought XLF way back here on the 24th of March. Why did I buy it? Well, as with any deep dip buy, it rejected a level. You see the purple line here? This is the 250-week moving average. So on that Friday, at the end of that week, I looked and said, look, okay, it rejected the 250. It's respecting the 250. One of the reasons that made me take this trade, I looked back in time. You see back here in October of 22, do you see how we also respected the 250? If it respected it in the past, it's more likely to respect it in the future. It doesn't have to, but it's more likely. So it was good risk to reward ratio. I got in here at 30.71. I position sized. I placed my emergency stop 2 ATRs below. My end of day stop would, or end of day week stop would simply be a close below the 250. I placed my trailing stop level 1.5 ATRs above. The next week moved up nicely in my favor. Took a little profits off. Next day, nothing. Next week moved up again. Profit targets got to trailing stop level, which means now that if I have a close below a previous bar's low, I will get out of half. Then we moved sideways for over a month. Nothing happened, but it did hold on a closing basis above my 250. And then we moved up again, took some more profits. I'm in trailing stop mode on this particular week. On the 23rd of June, we closed below the low of the previous bar's low. I sold half of the remaining shares that I have, locked in a 6.4% gain, and then kept moving up. Took some more profits here, took some more profits here, took some more profits here. So now we're getting extended. I'm looking for, if we get to a 65 RSI level, then have a close below a 5 EMA, I'm going to get out. Or if reject the 70 RSI, we'll get out of half, and then I'll get out of the other half if we have a close below a previous bar's low after rejecting the 70 RSI. I know, sounds complicated on the surface, but it's really not. The remaining shares that I have right now in XLF doing really well, up 12.06%. XLRE, okay, I did buy XLRE back here on the 2nd of June. Not a deep dip buy. This is what's called a higher low V2. Well, this green line, these are the value zone. Higher low V1s, V2s are the opposite of return to value V1s, V2s, because first you have to close below the value zone, which it did. You have to rally into the value zone, which it did. Then you have to come back down and then create a V1 or a V2 entry. And by the way, if you want to learn more about V1, V2 entries, in my YouTube channel, in the lessons playlist, I have a video specifically speaking about V1, V2 entries. It's completely free. They're very helpful. They're a big part of my trading. So I entered here, 36.32. I placed my emergency stop 2 ATRs below. My end of day stop is a close below half of the washout bar. Moved up the next day, took a little profits, then had a big down week, but you see how it held on a closing basis the halfway? Then the next week, again, tested it again. So you can see that is an important level. Then had a big move up, took more profit targets, moved up, got to my trailing stop level, and then last week, after reaching trailing stop level, had my first close below the previous bar's low. That was my signal to get out of half. And the half there looks like about a 2.12% return gain. And then this week, up a little bit, hasn't really done much. But at this point, if it closes below halfway, I am out. If it keeps moving up, I'll continue to take profits. If it gets into the 65 RSI level, then the 5 EMA will come into play, and I'll show you that in a minute with IWM, how that happened and how I got out of that today. Or if it rejects the 70, there's also rules that I have around that. So this particular trade, still doing well, up at 2.89%. Oh, I'm so glad to be out of this trade. For your sake and my sake. It was a fantastic trade, everyone, but I have been it so long and I'm just tired of talking about it. And just ironically, I was cheering it for it to get me out of the trade, and it did. I entered the trade all the way back here in October 14th. Why? Well, this is a deep dip buy. Orange line here is the 300-week moving average. You can see during the week we closed below it, then we closed above it, giving me a very good risk to reward ratio. So I position size, place my emergency stop 2 ATRs below. My end of week stop is simply a close below the 300-day week moving average. Place my trailing stop level 1.5 ATRs above. You can see the next week moved up, took profits. Next week moved up again, took partial profits. Then I got to trailing stop mode, which means if I have a close below previous bar's low, I'm going to get out of half. Next week up again, more profits. And then this was the first week that we closed below a previous bar's low after reaching trailing stop. Here. This is the first week below the previous bar's low after reaching trailing stop level. Sold half of my remaining position at 6.65% gain. Then we came down. Then we had another huge movement up here over a couple months. Took profits here, took profits here. Then we came all the way back down, and I thought, well, I'm going to have to get out of this trade. But you see how we continue to close above the 300-week moving average, never closed below. And then we had another move up, took some more profits here, took some more profits here, took some more profits here. Now, I did exit this trade this week. Why? Well, you've heard me talk about getting to a 65 RSI level. Up last week, 2 weeks ago, we got to the 65 RSI level, which means that now I'm going to tighten my stop up even more. And after reaching the 65 RSI level, if we ever get a close below the 5 EMA, which is this thin blue line here, I'm out of the trade. And I am out of the trade. Do not have to talk about IWM anymore. I'm glad. And for those of you that watch the channel all the time, I'm sure you're tired of hearing about it. But it was a wonderful trade. Really, really wonderful trade. And the remaining shares I exited for a 12.35% return. So just real quick recap, really super quick. The Zion short on the daily, still up 1.2%. LMT on the daily, up 1.77%. KMX on the daily, up 2.35%. Apple, the new trade I took on Friday, completely even. UNG on the daily up 14.3%. Then going to the weeklies, XLF up, remaining shares up 12.06%. XLRE up 2.89%. And IWM closed out with 12.35%. So really great trades there. Super great trades. It doesn't always happen like this, but you can tell, if you watch this podcast, that the gains that I have almost always outweigh the losses. The losses are fairly small in a percentage-wise basis, but on the upside, they can be double digits. And, I've shown you multiple double-digit gains here as well. So anyway, I hope you enjoyed that. Let's start talking a little bit about trader psychology. And hey, by the way, if you're enjoying the podcast so far, if you're learning something valuable, I would really appreciate it if you just hit the thumbs up button. Helps build the channel, helps keep the channel around. This is for my good friend, Steve Burns. Steve Burns is a great trader. He's a great author. Look him up on Amazon. He has lots of great books. I studied with Steve for a long time. He taught me a lot of great things. You can follow him at @SJosephBurns over on Twitter. But this is a great saying here having to do with trading psychology and trading in general. Profitability in trading doesn't come from one big win, but from consistent discipline trades over time. Stay patient and keep pushing your flywheel. So what he's saying here is profitability does not come over one big win. It comes from many, many different trades over a long period of time, just like a casino. And if you have an edge in trading, and you might ask, what's an edge? Well, an edge is something that you can validate over time, that mathematically, if you put that trade on enough time with that edge, that over time you will make money the same way a casino does. So don't think about making a lot of money on one huge big trade. Just think about grinding it out, being patient, waiting for your trade, using all the um, uh, proper trading principles that I'm trying to teach you here about position sizing, good risk to reward ratios, letting profits run, being quick to get out of losers. That's where your edge comes in having a good process. And again, this is what I teach in my one-on-one lessons. I teach you all these principles so that you can apply them so that you can grind this out and make money over the long term. So one last time, profitability in trading does not come from one big win, but from consistent, disciplined trades using, in quotes, using your process over time. Stay patient and keep pushing your flywheel. Thank you so much, Steve. Please follow Steve over on Twitter at S. Joseph Burns. All right, let's get into potential trades for next week. All right, so these are the potentials next week that I'm looking for on the daily. I want to mention that all of these particular markets are going to have different setups and entry signals. Doesn't mean, hypothetically, we could have all of these particular candidates next week trigger, but it doesn't mean I'm going to take all of them. I have a rule that on each time frame, I only take one particular entry. I'm going to take the best one. So here we have 9 particular entries for next week, 9 particular candidates. But if they all trigger on the same day, I'm only going to take one. And I'm going to take the best one. And what's the best one? The best one is going to be the one that has the best risk to reward ratio. It looks best on multiple time frames. Has the most confluence of signals with the best risk to reward. Okay, so this is Carnival, CCL, Carnival Cruise Lines. And of course, we went way up here. People thought everything was going to the moon. That's just not Carnival. That's everything, because we have had quite a significant pullback in the market. But where are we now on Carnival? What's the signal for next week? Well, this bar we closed below the -1 ATR channel. Then we rallied back into the value zone. So now I'm looking for a potential V2 here. If and only if on Monday we close above 1736. So this is only for Monday. If we close above bar one's close here on Monday at 1736, I will take the V2. Then I will position size. I'll place my emergency stop halfway at the washout bar. I'll place my emergency stop 2 ATRs below. I'll place my end of day stop halfway below the washout bar. But again, for me, on Monday, I will consider CCL if and only if we close above 1736. Goldman, okay, I was looking at this on Friday, but it did not close above the 200-day moving average. You can see the black line here is the 200-day moving average. What I'm looking for is to get above the 200-day moving average, a nice gradual move. If it goes up to here, I'm not going to take it, because now my risk is from here all the way to the 200. But if we have a nice gentle close above the 200, have the support of the 200 beneath me, then I will consider taking the trade. All right. And I'm glad the market pulled back, actually, because over the last few weeks, I haven't had a lot to talk about as far as potential entries. But now we've had this pullback, offers a good chance for us to buy some dips. But we still need the signal, real trigger. And again, on Goldman Sachs, close, nice gentle close above the 200-day moving average. That would be a close under. Close over the 200-day moving average. This is a deep dip buy strategy. We'll see what happens. But if a nice gentle close above the 200, I'll potentially be interested in getting long Goldman Sachs. NVIDIA. Well, NVIDIA has really sold off here. Again, I was talking about this back here in July. Everyone just had to have it. It was just a mob mentality. It was just, we need it, it's going higher, it's never going to go higher. And remember, don't buy, it's just a good principle not to buy in the value zone, not above the value zone. There are the people that had to have it up here. Are they happy? Not now, right? Because they let their emotions get the best of them. They let the narratives of what you're hearing about on financial media, oh, this is going to the moon, and there's no way it can pull back. Do you remember the narrative we had a week or two ago where we're going to all-time highs, nothing's stopping this market, we're going to have a soft landing or no landing? Yeah, didn't work out, right? When it usually doesn't. NVIDIA, what level am I looking at? Well, look, we're at a 3634 RSI level. No 200s, no 250s, no 300s in sight. But the next potential trade for me on NVIDIA would be if we go reject the 30 on intraday basis, which means it goes below the 30 RSI, closes above. That would be one potential. Or another potential would be a close under 30 and then back over 30. A lot of people want to get into NVIDIA because they miss this large move up. There will be buyers. There will be buyers, a lot of people, a lot of professional money managers looking to get into NVIDIA just could not justify buying at these nosebleed levels, looking for some kind of dip. Well, the 30 RSI level is what I am looking for next week. Now, keep in mind, earnings are on the 23rd of August. So if I do get this, say I get this trade on Monday, under 30 over 30, I will take the trade, position size, emergency stop, end of day stop, all that kind of stuff. But I never hold through earnings, ever. So if I'm in the trade, regardless, I have a big win, small win, loss, whatever it is, I will exit before earnings. But I think NVIDIA, of course, has been one of the strongest stocks until recently. I think a rejection of the 30 RSI would be a good entry point with a good risk to reward ratio. Pfizer. All right. Now, this one's going to be a little difficult to explain, but I was talking about higher low V1s, V2s. Remember, close below the value zone, which is the green line, close below, moved into the value zone. Now I need a pullback with a higher low V1 or V2. And the trade's not there yet, but I love this trade because if you look back in the past here, we have a double bottom with a bullish divergence, meaning the first low, you see how red or how deep the red and MACD bars are. This is a momentum indicator showing a lot of selling. Obviously, you can see it from the chart. Then we rallied, got into some green MACD bars. Now we have to go equal to or lower the previous low, which we did. But you see how the red bars here are very low, very shallow compared to the deep bars over here. That means that even though it came down significantly, that the momentum was not as strong as it was over here. Otherwise, these bars would be deeper than these bars. So this is showing us that we are potentially, that selling momentum is running out. This is called the double bottom bullish divergence. And it was spot on. Moved right back up. I'm not going to chase it here. A lot of new traders, retail traders will chase this here, but I'm not going to chase this. I'm waiting for a pullback and then a higher low V1 or V2. The people that were lucky enough to buy down here, they had a lot of profit here. And if it stops going up, starts going sideways, or starts going down, the people that bought here are going to sell. That's what causes the pullback. But then if we can buy that higher low V1, V2, then we have a potential for a nice move up. So again, next week, what I'm looking for is the prices to go below a previous bar's low, reverse up with the V1 or a V2. And again, watch my video in the lessons playlist on V1s, V2s that will make a little bit better sense to you, because here it's not doing it yet. I'm just trying to tell you in advance that if we do get a pullback and then a higher low V1, V2, I will consider taking that trade. Philip Morris is another potential with some kind of rejection of the 200, that's the black line, SMA, either an intraday rejection. You can see it almost got there, but it didn't. So either in the future, an intraday rejection of the 200-day moving average, a bounce at the 200-day moving average, or a close under, close over the 200-day moving average would be a good risk to reward ratio. In addition to that, you see the gray line here? This is the 50 SMA, black line 200. We had a crossover. This is called a golden cross. But in my experience, the first rejection that happens of the 200 after the golden cross, so the golden cross has happened, but we have not yet had a rejection of the 200. So after you have a crossover, after you have a golden cross, the 50 crossing over the 200, the first rejection of the 200, in my experience, is a very, very good place to buy. So that's what I'm waiting for. Silver. Okay. Earlier in the podcast, I was talking about island reversals and abandoned babies. Well, this is setting up for a beautiful island reversal. You see how we gapped down and now we've just moved sideways? If next week we get a gap up that leaves all these bars here abandoned, because look, this one gapped down, leaving abandoned. But if we gap up, leaving all these bars abandoned, that's called an island reversal. And let me show you an exact example of silver with this, right? This has happened in the past. We gapped down, we had 4 bars here abandoned, and then we had a big move up, leaving all 4 bars an island reversal, right? Gap down, sideways, 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 gap up. You see how these 4 bars are left alone? And then look at the move that abandoned baby setup, what it gave us. Unbelievable. So look at this. This is exactly silver. Gap down, sideways motion, and then a gap up, leaving these 4 bars here by themselves, floating in white space, and then the move up. Well, look what we have on silver now. Hasn't happened yet. I'm not saying it's going to happen, but if we do, for example, Monday or Tuesday or Wednesday, gap up, leaving these 4 bars, that will show us that something negative happened, and then all of a sudden, surprisingly, something positive happened, and I would get long silver using the approach that I use with 2 ATR stop to the downside, 4 ATR stop profit target to the upside, just like I showed you on UNG. All right. Bonds. Well, bonds are not helping out the market. We have had a huge sell-off in bond, which of course increases interest rates. That's one of the issues that the market's having at the moment. We're at a 35.51 RSI. I'm looking for next week some kind of rejection of the 30 RSI level, either intraday or close under, close over. That's what I would be looking for to potentially get long bonds. TLT. Unity Software. Oof, big move down, but it is coming into some levels that I'm interested in. Here's the 300 SMA, here's the 250 SMA, here's the 200 SMA. I like to have confluences, combinations in all of my trades. And look, we're near a 30 RSI. If you can ever get a entry where you have a combination of a rejection of a major moving average and also rejection of the 30 RSI, that's one of the best setups you can get. It doesn't mean it's going to be a positive setup, but it means that you have a confluence of combinations. So I'll be watching U, which is the symbol for Unity Software, very carefully for some kind of rejection of the 300, the 200, 250, or the 200 in conjunction with an under 30 over 30. Last but not least, Verizon. Okay, we're working on a nice potential higher low. Remember, I was talking about higher lows. 2 green lines, these is the value zone. We closed below the value zone. Now we've moved in. I would not get long here. Might just continue up, I don't know. But if we do get a pullback and then a higher low V1 or V2, which just means the washout bar, the V1 or V2, is going to be higher than this low here, that can lead to a nice big up move. So just real quick review, Carnival, if and only if we close above 1736 is what I'm looking for Monday only, potentially get long CCL Carnival. Goldman Sachs looking for a nice gentle close above the 200 to give me a risk to reward ratio. That's also a consideration. NVIDIA NVDA, looking for some kind of rejection next week of the 30 RSI level, but keep in mind, if I do take the trade, I will get out before earnings. Pfizer, similar to Verizon, looking for a pullback and a higher low V1, V2 on PFE. Philip Morris, looking for potential rejection of the 200 SMA. Silver, looking for some gap up, making this a bullish island reversal to the upside. TLT bonds, looking for some kind of rejection of the 30 RSI next week. Unity Software, looking for some kind of rejection of the 300, 250, or 200, in addition to an under 30 over 30. And Verizon, of course, looking for some kind of pullback and a higher low V1, V2. And again, these could all trigger on the same day. If they do, I would narrow it down to only one because that's my rules. So those are the dailies. Let's go to the weeklies. All right, Salesforce, been talking about this for a while. Weekly bars or weekly trades you take on a Friday, looking for some kind of rejection of the 200-week moving average. That's what I'm looking for potential entry on CRM on the weekly bars. Gold, if and only if next week we close above 180.19, I will consider getting long gold because it will be a V2, a return to value in the value zone. Here we came into the value zone. We have sideways motion. If we can close above 180.19 next week, that is what I'm looking for to potentially get long GLD. Netflix, looking for a pullback. I've talked about this for a while. Looking for a pullback and rejection of the 200-week moving average. Nike, been talking about Nike for a while as well. It just never triggered. Looking for a move down and rejection, some kind of rejection or bounce at the 300. Rio Tinto, next week, and if this happens next week and only next week, looking for a higher low V2. We closed below the value zone. We moved into the value zone. We pull back. Next week, if we can close above 62.27, that will give me a higher low V2. But only next week, and only if it closes above 62.27 will I be interested potentially in Rio. We talked about silver on the daily as well, with potential island reversal. But on the weekly, also lining up for a nice, some type of rejection on the weekly basis of the 200, either a bounce or intra-week rejection. Interesting, right? That on the daily we have some potentials going on here, and on the weekly we have a potential. But you can see if you look in the past, look at this nice, beautiful trade here where we just barely rejected the 200 week moving average, gave us a very good risk to reward ratio, and it would have worked out just fine. Made money on that trade. Doesn't mean that if we rejected 200 this time, it's going to work out like this, but it gives you a better chance. So next week, either a bounce test of the 200-week moving average or an intra-week rejection. And bonds we talked about bonds on the daily, but they're also getting there on the weekly. But isn't that interesting when you have something that's looking good on the daily and the weekly at the same time? It's telling you you're probably getting to that level. And the level on TLT, which is simply be some kind of rejection, intra-week rejection of the 30 RSI. We're at 33.74, so we really might get that. So real quick recap on the weekly. CRM, some kind of rejection of the 200 next week. Gold, next week and only next week, if I have a close above 180.19, will give me a higher low V2. I'll consider that. Netflix, some kind of rejection of the 200 week. Nike, rejection of the 300 week. Rio Tinto, if and only if we get a close above 62.67, that will give a potential higher low V2 in the value zone. Silver, rejection of the 200 week moving average, and again bonds, TLT, rejection of the 30 RSI. I want to talk about the markets in general. Let's do that for a minute, and let's take a look. Well, let's take a look at the Qs first. Okay, we've had a sell-off in the Qs. Obviously, does this mean we're going to go down and the market's over? No, but it is kind of interesting that we did reject the 50. The 50 SMA here. So I expect that we're getting close to a bounce. Here's the negative third ATR channel. 92% of prices tend to stop going down here, move sideways, or bounce up. So we're starting to kind of close in on that negative third ATR channel. So we could have some more downside in the Qs, but that negative third ATR channel there is looking like it may be some support. SPYs, SPY, a little stronger. If you look at the SPY, these three bars here, that was resistance. And then we broke over the resistance. So now that resistance is now support. And for the bulls, this was a little bit of a good sign that Friday we went below that resistance. Here's the line. I drew the line at the high. We went below it and closed back above. So that support did hold. So that looks pretty good. The SPY stronger than the Qs. TLT, that's one of the potentials getting long here. If we could get a rally in bonds, that would be good for the market. And we are getting close to that level. So that's also telling me we could potentially be looking for a bounce as well. The dollar UUP is quite high. When the dollar goes up, that's usually negatively correlated with the market. So we are getting into some extended areas on the dollar. So if the dollar pulls back, and I kind of expect it to, that would also be good for the market as well. VIX, which is volatility. Of course, we had a big move up in VIX here. Then we had a move down on Friday. That's also telling me that we could potentially be reaching a low in the market. So hope that's helpful. So at the beginning of the podcast, I did let you know that I do teach private one-on-one lessons in the evening time via Skype. I teach a 15-hour course, 5 sessions. Each session is 3 hours. That's where you get your 15 hours total. And in the course, I teach you all 5. I teach you step by step all 5 of the different trading approaches that I use. I love to teach. It's very important to me that my students succeed. If you take this course, I promise you, you will be a better trader. You'll look at trading a whole lot differently. And I teach you everything. I teach you all the specifics of good trading using good trading principles. The course does cost $1,750, but it's an investment in you, and you will learn a skill that you can use the rest of your life. So if you're interested, just send me an email. The email is in the link of this YouTube video. If you do email me, I will reply and say, hey, great. Thanks for saying hello. Let's set up a Skype call. The Skype call is free. It is not a sales call. I promise you. I just like to talk to potential students first, get an idea of what they're looking for, learning more about their trading challenges, their trading goals. And it's a really good time for you to ask me questions about the course in general or specifically. And then when we're done with the call, it's totally on you. You can think about it as long as you want, but one day if you wake up and say, hey, today I really do want to learn this from Greg, I want to learn all these approaches, then just write me back and we will set it up. All right. And again, if you like today's podcast, I appreciate if you could hit the thumbs up button. If you like online videos, I have a great online video course where I teach you the deep dip buy stock trading strategy. A lot of the trades I showed you here today are based upon that. Udemy is my course on Udemy is great. I've sold so many around the world. I've got so many good reviews, so much good feedback, and it's very affordable. It's only $12 to $15. So obviously the 101 course is more detailed and more advanced, but if you want to get started at a very affordable price, just go to my Udemy link in this description of this YouTube video and get the course, watch it. You're going to learn a lot. And then lastly, and always most importantly, please try to go out and do something nice for another human being today. Please try to go out and do something nice for an animal today. It would make the world a better place if we could all do one nice thing for another human being and one nice thing for another animal. And one day, if you need it, hopefully someone's there as well. So I really appreciate you being here. I hope you learned something valuable today in this podcast. Please be patient. Wait for the trade to come to you, and use good trading. Use a good trading process of good risk to reward. And I am looking for some kind of bounce next week. We'll see. If my signals trigger, then I will consider getting in the market. But big picture, I do think we are probably close to some kind of intermediate term bottom and a rally back up. But we'll see. I could be wrong. I am often wrong, but I'm often right too. But we'll see. All right, everybody. Thanks so much. Have a great rest of your weekend. Appreciate you coming by and investing the time. And God willing, I will see you next week, and we'll talk about how these trades did. All right, everybody. Take care of yourself. Thanks a lot. Bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.